Well, October has not been a kind of month to the U.S. stock market, but it has been even less kind to overseas stock markets. Several foreign exchanges are now in full-blown bear market territory. In this morning's U.S. Bank Economic 360, U.S. Bank Senior Vice President Mike Denneman is here to talk about what this trend means for U.S. investors, or us investors, too. He's with Business Courier editor Rob Dahlmeyer in the studio. Mike and Rob.
Thanks, Peg. Mike, thanks for being here.
Good morning.
So October was a lousy month for U.S. investors, but what are we complaining about? But what's happening overseas?
Yeah, it's been bad across the board. And so it's kind of a tale of two markets, really. U.S. stocks have been doing pretty well in 2018 until we got to October, whereas international stocks actually have been struggling for most of the year. So October for them is really more of just the same. And it really doesn't matter what kind of economy we're talking about overseas, whether you're a mature, developed economy, whether you're a new emerging economy. Pretty much everyone has taken a hit in terms of their stock market this year. Some worse than others, of course. As Peg said, there are some that are firmly in bear market territory. So, you know, just a few: Turkey, Indonesia, South Africa, we're talking 25, 30% losses. So really major downturns. And so, yeah, not on the whole a good year for international stocks.
What specifically is wrong?
So, you know, there's a lot of varied different reasons, of course, but one common thread seems to be that these economies are starting to slow down. And so that's something we've been immune from here in the U.S. Our economy is doing very well. In fact, we had a GDP report on Friday, which was much better than expected. So we've been insulated from that. But overseas, things are not as rosy. So some things specific to individual countries. So Italy, for instance, making headlines now. They're having trouble with their debt load, something we've seen with other southern European countries recently, Greece, for instance, Portugal as well. And then there's other themes that are more broad-based. So the strong U.S. dollar, for instance, is causing trouble for some emerging economies. So again, the common theme is that these other economies worldwide are slowing down, and that unfortunately doesn't seem like something that's going to turn the corner anytime soon.
So if it doesn't, or even if it does, what does this mean for U.S. investors?
Right.
What should we be aware of?
Sure. So yeah, this is more than just a philosophical discussion. The average U.S. investor has at least some of their holdings invested overseas. Very easy to do these days with mutual funds, exchange-traded funds. And so it makes sense academically to do this, but it hasn't worked out in 2018. That doesn't mean, though, at some point those markets will bottom out. They will look like bargains. They will look like opportunities.
Right.
Might not be next week or even next month, next quarter, but at some point U.S. investors will get the opportunity to do some buying at low prices.
Well, this is very interesting. Again, with the U.S. market taking that southward turn in October, it'll be very interesting to see what happens in November. Thanks for being here, Mike.
Yeah.